Let's get some more on the US session. Larry Shover, Chief Investment Officer at SFG Alternatives, joins us live now from the CME Group in Chicago. Larry, great to see you as always. Yeah, just in terms of the rally, I mean, it just continues to go on there. I mean, the S&P 500, yeah, dipped, but it wasn't by much, was it? Just in terms of what's driving this, is it central bank action mainly? Is that the main driver?
There's a lot of drivers. I mean, really, it's position and sentiment behind everything. But before I talk about that, I mean, yeah, economic data around the world is getting a little bit better. We have accommodative central banks around the world. We have multiples, stock market multiples that are reasonably valued right now, and also a healthy dose of skepticism, which continues to allow the market to climb that wall of worries. But really behind it, when you look at this rally we've had, the S&P has rallied 80 points since the middle of May, and really it was on position and sentiment. So many of us were worried about Treasury yields falling. We're worried about Ukraine and the small cap debacle. It just caused a really strong, sturdy wall to be built for the market to rally once we got confirmation of the ECB and the BLS, et cetera. And now we're off to the races, and the market's very, very static right now.
Do you expect it to continue like that? I mean, given that there isn't a lot of news expected for a few weeks.
You know, I think right now we're in a complete news drought, at least here in the U.S. We don't have anything until the 18th, which would be the FOMC meeting. So between today and then, yeah, I mean, I think right now we're in a static environment, and it seems like the equity market really likes that and wants to grind higher. Keep in mind that since May 15th, we've only been down 5 days, and of those 5 days, only 2 of those days have been 3 points or greater.
We're just hearing before from another commentator about the upcoming earnings results season. I mean, in terms of the second quarter earnings, what are your worries? What are your fears? What do you think we'll see?
Yeah, you know, I am a little bit concerned, cautious about the earnings season for the second quarter. And that's only because our multiple right now is by no means overvalued, but it's getting a little bit more fair value or expensive, as it were. Like right now, for 2015, I'm pricing in about $130, and that would get us to a 15-time multiple. That by no stretch of the imagination is expensive. It's not cheap. With that said, we need to have delivery on this earnings season, especially on the top line, and we can't blame it on weather, et cetera. We need to see a really, really good earnings season, or the narrative will change.
So finally, your thoughts on investment strategy right now. What are you doing?
Right now, and this just happened this past week, I mean, I would favor emerging market equities over developed markets, meaning I really like Portugal, India, Italy, Spain, especially Brazil. I mean, when you see that their duration has risen, currencies have risen, flows are getting very good, and most of all, we've seen PMI momentum shift in China. I think that bodes very well for the emerging market stock markets.
And just in terms of what's, you know, the reasons behind that emerging market sentiment there, because of the, you know, the stimulus action by those major central banks?
Well, I think it's that, but we're seeing good deal flow. We're seeing, we saw the currencies rally against U.S. We're seeing the PMI momentum shift a little bit in China, and also the duration. We've seen yields go down, and so people are forced to go out the financial repression system and buy equities. As simple as that.